Good evening, all. Uh, Welcome to today's update. This is just to align you as per where the trade is at the moment and what we should be expecting. We know now that the trend is towards the downside, but what can we see after we made this U-turn here? This is US dollar index 45 minutes. So I'm not going to be showing you what has transpired here. I think the weekend video should help you with that. So far we have a wave here and a wave B, and potentially it could turn out to be a 1 and 2, and the extension to the downside on the US dollar index is exactly, we are seeing this reaction at 161.8. Before going inside to discuss this, let me show you what we have on the DXY. It's similar to what we see on the US dollar index. So you can see A and a B, but the reaction here took place at 127. So 161.8 was what we saw on the US dollar index, and this one happened at 127. So everything is still within ABC. That is what we are saying. So we still need to push further down before we can say it's becoming impulsive and it's not corrective. So far, still looks, we are still going to engage as if it's corrective. So far, we don't take this hike here. Looking at the euro dollar, it's going to be a quick recap. On the euro dollar, it's the same as well, but on the inverse now. So we have an A and a B. This extension is barely 100%. It didn't touch 100%. So on the US dollar index, reaction took place at 161.8. On the DXY, it took place at 127. And on euro dollar, it didn't even reach 100%. So, but if you look at it, you know, the reaction here, the extension here is what we're talking about, the whole extension ABC. But within this wave itself, everything is playing out as expected. So what exactly do we have within this wave? So, and turning to that, I'm going to just turn to DXY alone to discuss the internal structure of that wave. This thing can freeze, okay? So we know that here, like I discussed, this is a 1 and a 2, and a 3, a 4, and a 5 here. So that's what we saw here, a 1, a 2, A, B, C of a 2, a 3, a 4, a 5 of wave 1, which is looks corrective, and a WXY, a WXY of the wave B. And now within this wave itself, we can see that the wave C, or potentially wave 3 here, looks like it's a 5-wave structure, which can later be a 3-1 if it's going to go beyond this, and if it goes beyond this area and correct deeply without breaking this top, then it's going to be a 3-1 and a 3-2 for further downside. That is what we expect anyway. And so looking at this is like a 1 and a 2. And here we are saying what within a wave 3, 3, 3, 3, 4, and a 3, 5. Now at this 3, 5, has this completed the whole of 1, 2, 3, 4, 5 to the downside? Or is it that we have, okay, this is a 2 and 3 has completed? Would this be a 4? If this is going to be a 4, then we can still have one more thrust to the downside. And after that thrust to the downside, we are going to correct entirely from here to here to the upside. And that is where we expect to take further bites to the downside. Now, if I go inside of this wave now, this particular wave, like I showed us, let me bring out the drawing. So looking at this wave and the way it's labeled, so we can see a 1 and a 2, and this is the height of the 4. That's the retracement of 38. And if we should break this to the upside, that means that we should be, we are correcting from here to here. So from this top to this bottom, once we break here. But so far, potentially this could be a wave 4, and we are trusting to the downside the last time. And after that, we should be looking for opportunity. But once you break this top, look for your retracement. If you are going to buy short without breaking this wave 2, we should be trusting to the downside again. That means it's going to be a deeper correction, and you can take. But for now, I still think that we may just come down one more time, that this may just be a 4. So let's go inside of a 5 minutes time frame. Inside of a 5 minutes time frame, looking at this structure here, this looks more like an A, B, and a C. If it indeed is an ABC, and that this aspect, this area here, marks a C, it means that we should either cap the top without breaking to the upside and continue to go down to do a 5. That is what I can see here. We may not break this top, or we should cap it to make a 4, a 5, and go down. But let's see what we can see here. On a 1 minute time frame, let's look inside of this wave on a 1 minute time frame and see what can we see on a 1 minute time frame. Let it load. Okay. On a 1 minute time frame, what I can see here is I can see that this looks like a wave 1, an ABC, and a 2, and this looks like a 3, a 4, ABC of a 4, ABC of a 4, and this looks like a 5. And indeed, if this mark the end, and we are seeing this to the downside, it means that we should not break. It's either we are seeing this as this cannot be a 4th wave, but we need to see that this thing does not break this place or cap it before we see a reaction to the downside. That's on 1 minute time frame. So let's go to the D. Let's go inside of a because it's like it's going up strongly here. We're just looking at, so far we don't break this to the upside, it's still good. Once we break this place to the upside, that means we are correcting deep. So let's look at euro dollar. Let's look at euro dollar. I quickly want us to see that and look for potential trades. So this is euro dollar. It looks the same. It looks the same. Looking at euro dollar, it looks the same. It looks the same. Let me bring out the drawing first. So what we see here is that we are seeing on a 5 minutes time frame, you can see on a 5 minutes time frame, a 1 and a 2, a 3. This is like a 3. And after this 1 and the 2, this is the next of the 3rd wave, 1, 2, and 1, 2, and this is the 3rd wave. And so we believe that here is a primary 4 and here is a 3. So we should be doing a fourth wave. See this as a fourth wave. Once we don't break below this trend line, it will still stand as a fourth wave and we should be going up. Now, let me go inside the 1 minute time frame for you to see. And we are where we should expect a turn. So looking at this wave in itself, which is the last C, A, B, and a C of that wave, before we turn to the upside. Now, like I said, from here down here, it looks like a 1, and this looks like a 2, and this looks like a 3, A, B, C of a 4, and this look like a 5. So if indeed it's like that, and this is a 2, this point is where we break 4. So because this had broken 4, potentially it's looking like this is a wave 1 of the last 5 to the upside before we correct it. So what we can see, because there's a break of 4 here on the 1 minute time frame, because you need to go back there. So if you're going to even take any trade here, you can take your buy trade here. Now, with this breakout structure here, so where you don't want to break, you want to see a reaction around this area now. This is the area you want to see reaction. This is the area you want to see reaction, and we are there in case you want to pick a trade to the upside. And if you do that, you don't want to break below this point. If indeed our count is correct, okay? So we don't want to break below that point. So what potentially I'm seeing, it's like we're going to have a reaction around this area to the upside. So this might just be a 1 and a 2, and we might be going further up. But if we should break low, then turn to this DXY and see probably if this is going to cap here and turn sharply to the upside. And that is what you must be looking for now. You must be looking for that. But this has ticked a 1, 2, 3, 4, and a 5 here for me. And I won't see this as a 5. In relation to this, it's not a 5 because that from here, it's gone beyond 50. So it most likely it's a wave 1 of the initial move to the upside again. For us to finish off these as a 3, 4, and the last thrust of 5 before we correct the all of this from here to the top down. So you can take a small risk here, a very small risk here, but you look at your DXY as well. So on gold, what is it that we are seeing on gold? On gold, it's pretty much the same. DXY, it's what is guiding us. Once we don't break the 4th wave to the upside, this may look like a primary fall here. We may be seeing this one to the downside as a fall. Let me bring out the drawing. So we may be seeing this as a 3 and a potentially as a 4, and we have the 5 before we correct deep. So we are waiting for that. If you want to pick a short trade to the upside, I think this is when you can probably look for a small buy to the upside before we correct deep. On the 5 minutes time frame, if I see this as an A and this as a B, I'm seeing this as a potential C. And this is where we want to pick our buy to the upside. It may be truncated, it may break. And I think once we begin to go up, all you can do is to trade your stop loss. As we are breaking structure to the upside, trade your stop loss, because we might just have a sharp turn of a deep correction. Like this, it might be a zigzag of an A, and an A, a B, and the last leg. So this might just be initial move of that zigzag now. This might just be a 1 and a 2, or it might just be a 1, A, B, C of a 2. And by the time we are having a 3, maybe by tomorrow, we should be, price may just spike down, touch this area, probably without breaking this point, and go back up. And that is why I've given this. So, but if the price should come to the upside, take this to the upside and continue to go, delete this order that I gave. I think with that said, that is what we are looking at. So now you must be paying attention to your DXY or US dollar index. I think with that, that ends it. So we need to see what is going to play out here now. And this is the DXY. So we need to see what's going to play out. I think it's almost capping it. So it may cap it and continue to turn to the downside. So without breaking this point now. So see you tomorrow. Bye.